All right, hi everybody. Welcome to the October SILA Foundation webinar. I'm waiting a little bit for people to pop in. We still have some people joining. Thanks for being here. My name's Cindy Davidson. I'm the education trustee for the SILA Foundation, and I'm here to welcome you to the October webinar, When Words Collide, Resolving Insurance Coverage and Claims Disputes. Today we have with us Bill Wilson, insurance professional, educator, speaker, writer, extreme nerd, and rock and roll legend. Today we're going to hear from Bill on how to understand policy coverage and also how to resolve claims and claims disputes. His book, When Words Collide, is all about resolving insurance coverage and claims disputes. It's filled with excellent observations, facts, and quotes. Bill is quite the expert on quotes, so I'll let him tell you more about that if he chooses to. This book also has an appendix of important court cases. It's got a glossary of insurance acronyms, so it's worth buying just for that. And it's probably the only book that includes cranitis rectal inversion in the index. So see, now you're going to have to buy it. With over 5 decades in the insurance business, Bill's been a licensed agent. He's worked for the ISO. He's been a CPCU officer. He's been a member of the Tennessee Insurance Commissioner Educational Advisory. And he founded and ran the Big I Virtual University for like 17 years. Be sure and read his full bio when you have time to spare. It's truly impressive. He's received numerous awards, most recently the Jeff Yates Lifetime Achievement Award from the Big I. So wanted to congratulate him on that. Let's see what else. If you aren't already subscribing to Bill's blog, insurancecommentary.com, be sure and do that today. And if you're in the Nashville area, be sure to check out his band, The Spiders. Their next gig is October 26th at the Last Call. I wish I could go. And so without further ado, ladies and gentlemen, Bill Wilson.
Great. Thanks, Cindy. Oh, by the way, the cranitis rectal inversio, they're going to learn about that today. They don't even have to buy the book to learn about what that means. I'll try to bring it up again. I just posted a slide. It had 50 on it. And June the 1st, I celebrated my 50th year in the insurance industry. When I'm live and people can see me, I tell them it's hard to believe that I've had 50 years in this great industry and I still look this good, and I'm still rocking and rolling with a band, as Cindy mentioned. But when I saw that my 50 years was coming up, one of the things I wanted to do is in May I turned 68 years old. And I started in the industry right out of high school while I was going to college, and have been in it ever since. And when you're 68 years old, you see the handwriting on the wall. You know your time and in this earthly plane is going to be ending at some point, hopefully 20 years from now, but it could be 5 years or 10 years or 1 week or whatever. But one of the things I wanted to do is share with people essentially what I've learned over the last 30 years when it comes to resolving coverage and claims disputes. And the idea is to do so without litigation. So I published a book last year. I'm going to be giving you kind of an overview of the book, and hopefully you'll find what I talk about worthwhile. I told Cindy I have about 3 hours worth of material, but we have really about 45 minutes left for me to try to cover it. So I'm going to be moving real quick. I'll probably have to kind of skip over some slides, and I'll do that with apologies. But at the end, you'll have my email address, and if anybody wants a copy of the PowerPoint, I'll be happy to send that to you. I want to start out. The book is about both preventing uncovered claims and resolving denied claims, one way or the other. my perspective is kind of from the policyholder standpoint and from the agent standpoint, because over the last 30 years, I've worked with independent agents, and this is what I've helped them do. I estimate I've probably assisted agents in resolving somewhere around 100,000 claims over the last 30 years. So that's kind of my perspective, but I'm going to share with you some doctrines and principles and practices and techniques and approaches for resolving disputes that work both ways. If you're in claims, a lot of what I'm going to talk about works just the opposite of how I may explain it. You may, if you're an adjuster, you may have had to deny a claim because it's not covered, and you had a hard time convincing the policyholder or the agent that it's not covered. Well, the things I'm going to talk about will give you some kind of fodder for making a better case or explaining better why something's not covered. But I wanted to take about 20 or 30 seconds to show you a series of slides. And I'm showing you these slides just to kind of give you a bigger perspective of what my book and what I think this program is all about. So I'm going to stop talking for just a few seconds, and I just want you to look at what you're seeing. For me, this is really, this visually, they say a picture's worth 1,000 words or whatever. This kind of visually, to me, expresses who we are, what we do, and why we do it as an industry. We help people put their lives together. What I'm showing you are obviously pictures from catastrophes, tornadoes, hurricanes, etc. But if anything, we're the second responders. We're in as soon as the first responders allow us in, and we start helping people put their lives together financially and frankly, emotionally in some cases. This has always been a relationship business. So a quick story. I want to take you back in time. An agent insured a farm property, and he made a mistake. He failed to schedule a barn on the property. So of course the barn was hit by lightning, burned to the ground, complete total loss, no coverage because of the mistake the agent made. Today, that would be an errors and omissions claim, and it'd be resolved that way. This took place though in 1952. And the way they resolved it was the agent represented 5 farm companies. The company that was on the account that for which this claim wasn't covered, the branch manager for that company called the branch managers of the other 4 companies and said, we would like to pay 1/5 of this claim. If you guys will each chip in 1/5, we'll pay this claim so that our agent, collectively, our agent won't be embarrassed in his community. It was in a rural area where the mistake would get out, could ruin the guy's business or lower his standing. And as many of you know, agents in small towns are often pillars of the community. So that's the way the claim was resolved. I can remember claims like this, that's even before my time, but going at least into the 70s, maybe 80s, that these kind of things happen, but they don't happen anymore. Today we have to resolve claims in another way other than just paying them. So the book that I wrote and what we're talking about today all boil down to what you see on this slide. Everything begins with the insurance contract. It doesn't matter whether you're an underwriter, an adjuster, an agent in sales or service, an expert witness, a regulator, a risk manager, whatever your role is in the insurance industry, everything we do boils down to the insurance contract and whether something is covered or not. That's why people buy insurance. So I know for any of you who have read policy forms, it's not a fun thing to do generally, but having been in education for over 30 years, I've always tried to make my webinars and seminars interesting, and that's tough to do if we're just reading insurance policy. So the best way to learn about coverage, I believe, is in the context of a claim scenario, a case study, or whatever. And that's basically the way I've taught insurance for over 30 years. To me, I love this stuff. I started my career as an engineer inspecting highly protected risks for insurance companies. And I got my CPCU designation and just got hooked on the policy coverage side of it. To me, it's like a clue game where you're trying to figure out was something committed by Colonel Mustard with the candlestick in the library. So I love it, but I do want to make the point that everything boils down to the insurance contract. That's going to govern, bottom line, what happens. So what we're going to talk about in our next 40 minutes or so is 4 reasons why claims are denied, 2 basic ways to deal with claim disputes. We can avoid or prevent them, or we can resolve them and advocate for the policyholder. Again, my perspective is largely from the policyholder and agency side. I'll talk a little about basics and doctrines. I'll give you an example of principles. And again, because of the time limit, I can't go into a lot of detail on these things, but I want to expose you to the tools that are available to you to resolve claims. Insurance policy interpretation, 100 pages of my 356-page book are devoted to specific examples from insurance policies that are often litigated and how to hopefully resolve them without that litigation. I won't even have time to get into any of that today, and it's almost a fourth of the book, but we'll save that for another day. And then finally, I'll wrap up with a 4-step, actually it's a 5-step process for resolving claims. So why are claims denied? Number 1, overwhelmingly, they're not covered. And when the adjuster denies the claim, the vast majority of the time, he or she is correct that it's not covered. And I'm not talking about claims where there's coverage and the dispute is over how much or that kind of thing, or whether it's ACV or replacement costs. I'm talking about claims that have been denied outright. They're not covered. That's the main reason for claim denials. Frankly, sometimes claims are denied for illegal or unethical reasons. And I sincerely believe that is a rarity in this industry because of the regulatory nature of it. A company culturally and systemically can't deny routinely claims that are covered, because sooner or later they catch up to them and you have regulators and the courts involved. And it's an industry of good faith. And I think the vast majority of companies observe that. Sometimes you have problems that are more commonly localized, involve a single person or a small group. But I think by and large, if there are any unethical things going on, frankly, it comes from the policyholder side. I tell the story where my dad was burglarized many years ago, and I helped him fill out the loss report, and he said, "What's the name of a good stereo system?" And it caught me off guard. I said, "What do you mean?" As they stole a clock radio. And he said, "Yeah, but I'm going to get me a good stereo with my insurance money." And I had to point out that committing or filing a fraudulent claim is a felony in our state and everywhere. And there is a potential jail and financial penalty for that. So he ended up getting a new clock radio. But a lot of consumers think that way. They're not bad people. They just think that I pay money all the time and I should get something for it sooner or later. Here's the thing that Cindy mentioned, crinitis, rectal inversio. Sometimes you get claim denials that are just bizarre. They don't make any sense. And I give several examples in the book. And when I do this in an all-day format, which I'm doing in Alabama next week, I can go into more detail. But I'll give you one quick example. This was a warehouse, and a tractor trailer rig got away from the driver and he crashed into the back of the warehouse, did about $6,000 worth of damage to a loading dock. Well, the agent turned the claim in and the adjuster denied the claim. And the basis for the denial was that under the building and personal property coverage forms, an ISO CP 0010 standard form, there was a section called property not covered. And in that section, that one category of property was piers, wharves, pilings, and docks. And loading dock and has the word dock in it. So the adjuster said, this excludes piers, wharves, pilings, and docks. Well, we'll see later, time permitting, that there is an ambiguity doctrine called nociter associs. Trial lawyers know all about nociter associs, and it involves contract law in general, where you have a list of things which are common in insurance policies. You have lists of a lot of things like exclusions, and you have a list of things. Nociter associs is Latin for it's known from its associates. So if you have an item in a list, what that item means is whatever everything in the list means. So piers, wharves, pilings, and docks refers to waterfront property. That's what's being excluded, not loading docks just because the word happens to be the same. So these kind of claims, they don't happen a lot, but over 30 years, I've seen a lot of them just because of the time frame. And these are the easiest claim denials to refute and get covered, because there's really no basis in the contract language and in the interpretation of the contract language for that kind of a decision. The one that my book is really dedicated to, though, is where there's a legitimate difference of opinion about coverage. People just disagree over what something means. And there's a quote here from a former Supreme Court justice, and I'm going to come back to that a little bit later on. A quick example of that is virtually every property policy has an exclusion for earth movement. If you look at this historically, this is a catastrophic claim. The idea is to not cover things that could bankrupt or financially imperil a company. So they exclude earthquake and flooding and those kinds of perils. The issue is, I've had several claims involving damage caused by boulders. And if you see the picture there, if you ever saw the movie Black Sheep with David Spade and Chris Farley, as one scene in the movie, they were in a cabin and a boulder came crashing through the back wall and into the cabin. So the question is, under a homeowner's policy, would that be covered? And I've been involved in at least 2, maybe 3 claims where this happened and the claim was denied, citing the earth movement exclusion. So the question is, what does earth movement mean? And when you're debating a claim and trying to resolve a dispute, it's like going to court without going to court. You have the scales of justice. Each party tries to present as much evidence and logic and reason as they can to support their position for or against coverage. So in the cases I've been involved with, we've been able to get the claims paid. And just to give you a couple of examples of reasons why, we argued that earth movement was a plural term. Earth was plural. It's referring to soil, dirt, rocks, not to a single really, really big rock. We don't look at that. We didn't perceive that to be earth movement. And you look at the terms there: earthquake, which affects a wide area, landslide, mudslide, etc. So our argument was that this was referring to a plural type of exposure. We also made points like, for example, if a vandal throws a rock through a window, normally property policies, most of them cover vandalism, even though they have an earth movement exclusion. No adjuster would consider using the earth movement exclusion to deny a claim involving vandalism of a rock being thrown through the window. But it boils down to, what's the difference between a rock that is moving through the air and a boulder that rolls down a hillside, hits a ledge, and comes through the roof of a home, which was the case in one of the claims I was involved with. So we use things like that, one item after another, to form a premise or a basis for there being coverage, and whichever direction the scale of justice tips is the one who wins. This is a quote from one of my favorite movies. If you ever saw The Princess Bride, the main character is Inigo Montoya, and there's another character that all through the movie, anytime something happens, he yells out, "Inconceivable." And Inigo points out that he keeps using a word and he really doesn't understand what it means. Well, that sometimes happens in policy interpretation. And I'm going to give you an example. This is a audience participation. I'm going to ask half of the audience here in a second to close your eyes and I'm going to show a slide to the other half, no peeking. And then I'm going to reverse it. The folks that close their eyes, they can open it. I'm going to show them the same slide. And there's a method to my madness. So I just ask you to play along, and I'll reveal in a minute what I'm doing here. So if your last name begins with the letters A through L, I want you to close your eyes right now until I tell you to open them. Okay, you can open your eyes. Now, if you're in the other group, if your last name begins with the letter M through Z, close your eyes until I tell you to open them. So close those right now. You can open your eyes. And I ask the question, when I'm live, I ask everybody to yell out in one word what they saw on the screen. And what some people yell out is a frog, and what other people yell out is a horse. And this is the sketch that you just saw. If on the left-hand side, if you saw a fraud, turn your head 90 degrees counterclockwise, or rather clockwise, and you will see a horse. On the right-hand side, there's the horse. Rotate that figure clockwise 90 degrees, or turn your head to the left 90 degrees, and you'll see a frog. So what I showed you was exactly the same sketch. I just simply showed it to you in a different way. So everybody in this audience looked at the same thing, but they came to two different conclusions because the perspective that they had was different. And that's true in policy language. There's no necessarily, often there's not a right or a wrong. It's just that we see things differently depending on our individual perspectives. So two ways to deal with claim disputes. You can prevent claims, or you can resolve them once they're prevented. There's a little graphic there in the lower right-hand corner that says disputes and lawsuits, how to deal with the inevitable. Well, I don't believe they're inevitable. I guess some of them are inevitable because we always end up litigating some things, but many disputes can be prevented by properly analyzing exposures to loss and insuring them. But there are some things that will slip through the crack because every policy has exclusions in it. And there may be no way to get around those exclusions, at least no affordable way. So ultimately, you may have a claim that involves an exclusion, and the question arises, does the exclusion apply within the facts and circumstances of this scenario? And that's what I'm going to talk about for the rest of the way. On the left-hand side, I've the two ways to deal with disputes, I've split into two sections. I'm going to go through very quickly the left-hand side and try to keep most of our time available on the right-hand side to go through the various steps of resolution. I'm also, because this is a regulatorily focused program or series of webinars, I'm going to try to point out some regulatory issues as we go through here and how insurance regulators can be of help in this process. But first of all, on the left-hand side, there are seven different considerations for preventing uncovered losses. And I can't go through all seven simply for a matter of time, but I'm going to focus on a few of these right in the middle. So once again, the best way to avoid claim disputes is by preventing them. If you ever saw the movie Wargames, it's about a kid who he thinks he's playing an online game called thermonuclear war and global thermonuclear war, but actually he's accidentally gotten into the Department of Defense's new computer system, which would control a nuclear war through artificial intelligence. So what happens is he initiates a possible global thermonuclear war, and at the end they try to figure out how to stop the computer, because once it starts going, nobody can intercede in it. So what happens is the machine, they have it play tic-tac-toe against itself, and it realizes after playing trillions of games in a matter of a minute that there's no way to win a tic-tac-toe game. So then it plays itself, in theory, this thermonuclear war, and realizes that there's no way to win a thermonuclear war, that everybody loses. So at the very end, everything works out great, and the computer says to the professor that programmed it, the only winning move is to not play. And I give that as a metaphor for what I'm talking about when I say prevent claims from happening. The best way, or rather to prevent disputes, the best way to manage a dispute is to not have one. And the way to do that is by providing coverage, identifying exposures, etc., which I'll touch on in just a second. Another example, I love to quote cinematic classes like Roadhouse, which is a movie that escapes me why it didn't win at least a dozen Academy Awards, but it didn't. It's about a guy who was the head bouncer at a bar. He called himself a cooler, and he, early in the movie, if you've ever seen this, he gets a knife wound in a fight in the bar, goes to the hospital to get it stitched up, and he carries his medical dossier with him from all these other clubs where he's worked, and he's had gunshot wounds and knife wounds, etc. And the doctor asks him, says, "Do you ever win a fight?" And his response is, "Nobody ever wins a fight." And that's kind of the same with a claim dispute. Nobody ever really wins a claim dispute. Nobody's ever really fully happy. Even if the policyholder gets their money in the end, just the whole process of disputing a claim is emotionally draining, and you never really fully recover financially, most likely. So once again, the best way is to prevent an uncovered claim. And here's 7 ways. I'm going to very quickly run through 4 of them. One thing is to always keep in mind one of the foundational principles of our industry, and that's the purpose of insurance is to insure. We always look for coverage. There's an excerpt from a 30-something-year-old traveler's claims manual that an attorney loaned to me. I hope this is still in the claims manual. I have a feeling that something like this probably is, and in most claims manual. But the best way to do it is to look for coverage, not for ways to deny coverage. Needless to say, you're going to look for the exclusions if they apply, but the first thing is you look for coverage that triggers the insuring agreement. And never forget the mission of the industry. If you ever saw the movie City Slickers, Curly, the trail boss, and Mitch, the main character, the Billy Crystal character, are talking about, what's life all about? What's the purpose of life? And Curly, the trail boss, said it's about just one thing, but he won't tell Mitch. He says he has to figure it out for himself. Well, you're lucky. I'm going to tell you what I think the insurance industry's mission is, our one thing. And I believe that our one thing, if you're looking for a mission statement, is to assist people and organizations in minimizing their exposure to serious or catastrophic financial loss. That's what this industry is all about. It's what I believe our focus should be, again, whether you're an underwriter, an adjuster, or any other position in the insurance industry. If you ever read my blog, you know that I sometimes get on the insurance industry for its advertisements. I wrote an article or blog post called "What's So Funny?" and it was based on a tweet I saw from a guy who said, "Why do insurance companies try to out-funny each other in their TV ads to sell products?" And I thought for a minute, and I said, "What is so funny? There's really nothing funny about our industry. It's we don't want to do advertisements and commercials that are depressing or sobering, but I mean, the bottom line is we deal daily with really sad events in many cases. So the point I made in the blog was there's other ways to advertise. This is, I don't know if you can tell from this grainy photo, but this is former Alabama football coach Bear Bryant, who once did an advertisement for South Central Bell on Mother's Day. And he said that they always required their football players to call home at least once a week. And at the very end of the commercial, he says, "Have you called your mama today? I sure wish I could call my mama." And within minutes, South Central Bell's telephone system collapsed from all of the people calling their mamas on Mother's Day. So it shows the power, the emotional power that can come from advertisement. So I understand the purpose of advertising is to do something memorable, but there are ways to do that from an emotional standpoint other than humor. Another thing that I harp on sometimes about industry advertising is that it's so price focused. And this is a resource online. Again, I can send you a copy of this and you can see where to go to get this. But insurance is not a commodity. Remember, everything boils down to the insurance contract, and they're different. A lot of companies use ISO standard forms, but they modify them. Either they use a modified version of the policy, or they add their own endorsements, or they create their own policies from scratch. There's nothing commoditized about insurance products. They're not even remotely a commodity. There's a lot of misinformation out there about that. It comes to some extent from our advertising. You get the same coverage, often for less. It's not the same coverage, and little things can make a big difference. Another thing that I talk about is insurtechs. If you see there, a lot of these, the organizations listed are some insurtech startups. This whole thing about speed, how fast can you get a quote, or how fast can you buy an insurance policy, started with 15 minutes. We can do it in 7.5 minutes. Now we have insurtech saying that we can do it in a minute and a half or less. And my response is, no, you can't. If you're selling homeowners insurance, you can't do it with a name and address. And there's a company, I don't even have them on here, but I got a quote on my home from them. And they say they can do it in a minute because they use big data and they don't need anything more than my name and address. And I got a quote from them. And when I looked at how their quote was derived, the square footage they used for my home was 1,200 square feet smaller than my home actually is. So the data they used, which happened to be county tax records, was off significantly. It would have meant that my home would have been $200,000 underinsured. So I wrote another blog post called "What's the Hurry?" You know, why do people have to buy insurance in 60 seconds when they're protecting everything they own and potentially their income over the next 30 years by buying insurance? Why does it have to only take a minute or 2 minutes or whatever? Why can't you invest an hour? Another example of insurance is not a commodity. Every auto policy has a racing exclusion. I wish I had time to go into all of these examples, but I don't. These are 3 different policies. Every one of them has a different kind of racing exclusion. The first one is the ISO personal auto policy. The only racing it excludes is racing that's located inside a facility designed for racing. It doesn't exclude street racing. The one at the very bottom is the North Carolina bureau policy, the mandated auto policy in the state of North Carolina. It excludes spontaneous racing. So I believe it would exclude street racing. So while they're racing exclusions, quote unquote, they're very different in what they cover and don't cover. Another example, many policies exclude repeated seepage or leakage, plumbing leaks that take place over weeks, months, or longer. The ISO policies at the very bottom of this slide don't have that exclusion anymore. ISO removed it in 1991, but many companies, probably most companies, did not. And even ISO companies may have their own exclusions. If you live in an older home with older plumbing, there could be easily 5 figures or more in water damage claims if you go on vacation and a fitting bursts and you get flooding in your home. So these are material things. Someone with an older home might want a policy that doesn't have that kind of exclusion in it. I mentioned the policy form drafting. I've seen all kinds of horrible policies in the marketplace. Sometimes they're in the E&S marketplace, but sometimes they're admitted carrier policies that use wording like farm-like. This was a policy, a homeowner's policy, that excluded any structure that was farm-like. Now, what could that possibly mean? It could mean a lot of things. Anytime you have unclear language in a policy, then you open the gates for claims of ambiguity, and denials and disputes arise from that. I just want to mention the importance of education. Most states have mandatory CE laws, and the quality of education varies dramatically. I've seen lots of online education that's not even at a licensing school level, but it's approved for continuing education. And then there's great education like this webinar, hopefully. The last thing I'll talk about in this section, because I need to move on. We've only got about 15 minutes or so. Is three sources of coverage gaps that lead to disputes. One is the failure to identify exposures. That's one of the big issues with the InsurTechs. You can't identify exposures in 60 seconds, no matter how much big data you have or even how accurate the data is. And I can give you a lot of examples if we had several hours to do this, real life examples of where claims have arisen from exposures being overlooked. The second thing is failure to insure exposures. You identify the exposures, but you don't properly insure them. Then obviously you can have coverage gaps that arise. And the last thing, often overlooked by agents, is the failure to quality control the final policy, because agents may ask for certain coverages or forms, and when the policies come in, they want to check to make sure that everything they ask for is there. But don't forget to look for things that the carrier has added that you didn't ask for, because they're almost always there. That's always the case in the E&S marketplace. It's often the case in, particularly in commercial lines and in the construction industry, that companies will add endorsements. Some of them are added from an underwriting standpoint, and they're negotiable. You can have them removed. It may cost extra premium. It may not. You can have them replaced with an endorsement that is not quite so exclusionary. So there's sometimes ways to modify that. And sometimes they're done for underwriting reasons. Sometimes they're done for manual reasons, that the manual requires a particular endorsement. If you're insuring an ice skating rink, there's probably an endorsement that will exclude medical payments coverage, and the company may have no option to get rid of that endorsement, but at least you ask about it. So what happens when you don't prevent an uncovered claim? David Copperfield has a line in it that says accidents will occur in the best regulated family. No matter how good you are as an agent and underwriter at packaging policies together, things will slip through the crack because you make mistakes, or policies will just have exclusions. And sometimes those exclusions in the context of a claim aren't absolutely clear. So I look at a four-step process, and when I wrote the book, I realized there was really a fifth step at the very beginning, which I called step 0 now. And in advocating for a claim, agents do this all the time. Good agents do this. Sometimes people hire public adjusters or they hire attorneys, but we're looking mainly at the use of agents. And how do you get a claim paid? Forms and facts matter. I'll give you an example of that. Logic and language, I'll give you an example of that. Then I'm just going to expose you to these interpretation doctrines and principles. If you have an interest, you can explore those in details later. This is the quote that I had on an earlier slide from Supreme Court Justice. A word is not a crystal, transparent and unchanged as the skin of a living thought. It may vary greatly in color and content according to the circumstances and time in which it's used. A word may have a different meaning in a different set of circumstances. The same is true for a policy provision. Here's a list of ISO HO3 forms, which is the dominant homeowners form in the marketplace from an ISO standard position. ISO's three most recent editions of that are April 91, October 2000, and May of 2011. One of the things that homeowners policies cover, they usually exclude motor vehicles because auto policies cover most motor vehicles, but some kinds of motor vehicles are covered by most homeowners policies. One of those is a vehicle used to service your premises. And the most common kind of a vehicle that does that is a riding lawnmower. So the question is, what if you have an accident with a riding lawnmower? Do you have coverage? And it sounds like a simple question. It should have a simple answer, but it doesn't. You have to look at the language in the policy form. I had a neighbor that left a screwdriver laying in his backyard and didn't see it, drove over it with his riding mower. The shaft of the screwdriver ended up sticking in a tree about 10 feet from where my 10-year-old son at the time shot basketball. He could have been killed by that. So if that happens, if you have a bodily injury, is there coverage or not? Well, it depends. And the scenario I'll give you here, remember, everything varies by the facts and circumstances. Here are two homes side by side, near their driveways. In between them is a grass median, a strip of grass, and right down the middle of that strip is the property line. So one side of the grass belongs to one residence, the other side to the other residence. So let's say that I am mowing my lawn and I'm mowing this grass strip. I'm not going to mow along the property line. I'm going to mow the entire grass strip, which means I'm now using that motor vehicle that's used to service my premises to service somebody else's premises. So would I have coverage if I ran over that screwdriver? Well, in 1991, the policy ISO's form said, if the vehicle is used to service an insured residence, then there's coverage as long as that vehicle is being used in the coverage territory. So I would have coverage for that. However, ISO changed it in 2000 so that there's coverage for the use of a riding lawnmower only if that mower is used solely to service an insured's residence. So the argument is, since I'm now servicing my neighbor's residence, it's no longer used solely to service my residence, and I have no coverage. So and I was part of an advocacy group when I worked for the Big I, and we got ISO to back off a little bit on that. We wanted them to go back to the 91 language, and they wouldn't, but they said, we'll go back. We'll change that a little bit. So they changed it so that the exclusion only applies to a riding lawnmower used solely to service a residence. And now I've got coverage. But if right behind here where I lived, there was a church property, and some of the neighbors would take their riding lawnmowers and service or mow the grass at the church property, that's not a residence. So they would have coverage under 91 policies, but not under 2000 and 2011. It's very difficult to explain this to a customer why this is, given that millions of people have riding lawnmowers, and whether you have coverage or not depends on exactly how or where you're using that vehicle. But that's the reality when you're dealing with claims. Logic versus language. There's an educator from Florida now in his 90s and retires that said, if you can't argue the form, argue logic. If you can't argue logic, argue the form. The best thing to do is if you can argue both the language of the policy form and logic. Give you a quick example. This is from the ISO homeowners policy. It has a freezing exclusion. There's no coverage for damage that results from the freezing of a plumbing system. But there are two exceptions made. If you maintain heat in the building, in the dwelling, or shut off the water supply and drain the system, and they're still freezing, we'll cover the damage. Well, what happened in this actual claim was a water line to the hot tub froze and caused about $1,200, $1,500 in damage to the pump and the line and so forth. The adjuster denied the claim, citing the freezing exclusion. And we argued that, yeah, they didn't shut the water off, but they had maintained heat in the dwelling. And his response was, well, what difference does that make? That had nothing to do with preventing the claim from happening, and it doesn't matter. That's what the policy says. It says if you maintain heat in the building, the exclusion doesn't apply. So the language rules, even though it doesn't make any common sense, that's what the language says. I doubt that that's really the intent, but that's an exposure that apparently they forgot to consider. So what do? The carrier pays the claim, then they go back to this issue of drafting the policy forms, and they change the wording to reflect the intent, that add the exclusion so that the freezing to a line outside the building isn't covered under any circumstances, if that's what they want to do. And I've had companies do that. To their credit, they would go back and change revise their policy language after paying the claim. There are some doctrines in the book, and again, we're getting close on time, but I've applied, these are all doctrines that I've used as part of getting a denied claim reversed. Not solely any one of these, but collectively I've added them to my side of the scales of justice to get them to collectively make a point and weigh the scales in our favor. RTFP is a doctrine. I used to have t-shirts that I gave away on this. It stands for read the policy. And that's, again, that's where it all starts. You have to read the policy. I can't tell you how many hundreds and hundreds of times I've had people arguing and they haven't read the policy, and that's all they had to do to know whether there was coverage or not. There are, in the book, I talk about 17 different principles of policy interpretation. I've used every one of these to get claims paid. I'd hope to be able to go through a few of them, but we're not going to have time. I did want to mention that NAIC has a system. One of the best sources of information to know what the meaning is of what's in policy is to look at the filings that are made by ISO and AAIS and individual companies. When they revise policy forms or introduce policy forms, they'll have an explanation of what they mean by the terms in those policies. I've used ISO filings, I can't tell you, dozens and dozens of times to get claims reversed. The big one is ambiguities. That is probably the mother of all claim disputes, that a term is ambiguous. And I go into a great deal of detail, about 30 pages, I think, in the book, with example after example of claims in court cases. I think I cover 160 claims in the book and 80 court cases that illustrate all of these different principles. This is one. This is a view out my living room window. I live on a lake in Tennessee, and we had a tornado come through, and it took out 18 trees in my backyard. And I had to hire a tree service company. I got 4 or 5 bids. One of the companies had I asked for proof of insurance from all of them. One of the companies had showed me their CGL coverage, and it had an endorsement on their policy. Nothing wrong with the ISO policy they had, but they had an endorsement that excluded ongoing operations and your work, which is another way of saying completed operations. So the outfit that was bidding had no coverage whatsoever for the work that they were doing. And this guy was totally oblivious to that. Whoever, from a regulatory standpoint, whoever had sold this guy a policy knowing that it didn't cover what he's doing should be drugged before the insurance commissioner for doing something like that. And it continues. There's some other examples. My greatest work with regulators was when I spent 11 years working for the Big I of Tennessee. And I worked with 2 people in particular with the Tennessee Department of Commerce and Insurance, Newton Black, who was with the Policyholder Services Division, and Dick Weber, who was with the Rates, Rules, and Forms divisions. These guys were invaluable. If we had a really hotly contested claim, if I could convince them that there should be coverage, they would take the side of the policyholder and at least try to intermediate or somehow assist in the resolution. So don't overlook the fact that regulators in your state can be of great help. So real quickly, we've just got a few minutes left. The first thing you want to do when a claim has been denied is make sure that it meets statutory and regulatory muster. Even if it's a legitimate denial that something isn't covered, there are certain conditions that the denial must meet. That has to be in writing. So from the standpoint of what these denial letters can or can't do, they have to be in writing. They have to cite the policy language. They have to explain why and how that language applies to the unique circumstances of that particular claim. You can't generalize about policy language. You can't include policy language or excerpt it from the policy that misrepresents the intent. And I have a bunch of examples in the book. I have examples, if we had more time, I could talk about with you that I'm about to skip through in the next few slides. And I've seen a lot of claims where essentially the adjuster has just taken a huge section of the policy and copied and pasted the exclusions into a denial letter, even though hardly any of them applied to it. This was an example of somebody paraphrasing policy language, and in doing so, they twisted the meaning of the policy. I suspect this was accidental. It wasn't done on purpose. They just didn't know what they were doing. There's another example of where someone excerpted all but an exclusion, but not the exception to the exclusion that actually granted coverage. The exception was all the way down at the bottom of the page, and I'm guessing they just overlooked it. That's why you RTFP, you have to read the policy. This was an example of a water damage claim where a water pipe leaked and flooded a home, and the adjuster just copied and pasted every exclusion in the policy, exclusions for insect damage, for agricultural smudging, just all kinds of stuff. And that's simply just laziness when you do something like that. And I can tell you the courts don't look very favorably on that when it happens. Bad faith is a rare thing. It's very difficult to prove bad faith. Someone told me that in New York State, there has not been a successful bad faith case against an insurance company in over 20 years. But there are certain practices, once again, that people have to abide by. This is California, has to be in writing, has to list all of the reasons for denial. It has to explain how a statute, a law, or policy condition or exclusion applies to the claim. And this is a judicial decision by the South Carolina Supreme Court that basically says you can't use a cut and paste method just to slap stuff in. There are lots of court cases like this around the country. So here's the four-step process. Step one, read the policy. Does the insuring agreement apply? Is the person insured? Are there any exclusions that apply? But the first thing, you go in and look for coverage in the insuring agreement. Does the policy provision seem ambiguous? What is the intent of the language? What are the expectations of coverage, which was one of the 17 principles that I talk about in the book? Document your interpretation. You're really looking for authoritative support for your interpretation. And I've used things over the years. If you've been in the industry for a while, you're familiar with FCNS bulletins published by the National Underwriter. Hopefully you're familiar with IRMI, the International Risk Management Institute, which specifically, particularly in commercial lines, annotates all of the ISO policy forms, what the language means, etc. Anytime you can cite things like that, if you can cite court cases, those are the single best types of ammunition that you can provide if you have a court case. And there's lots of free information that's available on the internet. And the last thing is you plead your case using logic and language. A few points I'll make here. I'm going to try to wrap it up in the next 3 minutes. This is a guy talking to a psychiatrist and says, if you weren't so stupid, maybe you could figure out why so many people don't like me. The point I'm making here is treat the insurance adjuster as a professional and vice versa. And that can be illustrated once again from the landmark movie Roadhouse. If you ever saw this movie, you know Dalton, the head bouncer, had 3 rules for handling disputes in their bar. Expect the unexpected, take it outside, and I don't mean by that to go outside with the adjuster and fight it out behind your office. But the big one is be nice. Be nice to each other and treat each other professionally, because again, if it's a matter of interpretation, if it's a reasonable difference of opinion, it's nothing more than that. It's not the company trying to screw over a policyholder or a policyholder trying to get something they're not entitled to. People have legitimate differences of opinion. So you plead your case, you go back to the adjuster. My experience has been that if you can make a case for coverage, you will get the adjuster to reverse the case over 90% of the time. If not the adjuster, their supervisor or the manager. Or sometimes you can go to get assistance from regulators. Every now and then you may have to get an attorney involved, but often and usually it doesn't involve litigation. It could be just a letter from an attorney that's enough to convince the company to pay the claim, go back and change their policy language, and move along. So there's a recap. I always end a program like this with what I consider the insurance professional oath, that's what we all are. It's based on the CPCU oath. And again, if you want a copy of this and all the other slides, I'd be happy to send those to you. I'll end with the insurance golden rule, and we'll see if there are any questions. Never forget in everything that we do professionally, the purpose of insurance is to insure, and that the mission of our industry and all of us in it is to assist individuals, families, and organizations in minimizing their exposure to serious or catastrophic financial loss. We always look for coverage if it's there. There is information about my book. It's available on Amazon in both print and Kindle versions. If anybody actually has the print version, Amazon has some sort of a sale going on where you can buy the Kindle version for $2.99, I think. There is my final slide. That's my website. That's my email address. Email me anytime. Email me with any questions that you may have after this presentation. And again, if you want a copy of it, shoot me an email and I will send it to you. And with that, I'll turn it back, I guess, to Cindy.
Yeah. So thank you so much, Bill. I can see that this is a topic of a lot of interest to a lot of people. We have a lot of participants today. We might have to invite you back for a part 2 maybe next year. I think that would be helpful. For those of you guys who are have attended before, we're doing something new. We'll be sending out some surveys after this webinar. We haven't done surveys previously, but we're going to capture reactions, and please fill those out. They help us to get better. I'm glad that we're doing our first survey with such a great topic and great presenter. So thank you so much, Bill, for being with us. We don't have any open Q&As, but we do. I did want to let you know this webinar has been recorded. It'll be available on the foundation website, and we can certainly we can make the presentation slides available so that 120 people don't email you directly, Bill, but that could happen too. And then
Okay.
Last thing I was going to say, I don't have any questions, but my 17-year-old just creamed a 2019 BMW. I don't have any questions. I just want sympathy.
Well, that's why, I guess you have an agent. That's what agents do. They give you a hug.
Yeah, right. So, and of course it was a rental, so that even complicates things even further. But I remember you telling me once, with teenagers, it's not a question of if. It's a question of when they're going to have their first accident, especially boys. So
I don't want to belabor things, but I mentioned I turned 50 years old. Last year, another 50-year celebration was I had my first auto accident in 50 years. I had 2 others. Both of them took place when I was a teenager. So yeah, if you got a teenager, they're going to have an accident.
Yeah, it's a question of when, and especially it's probably going to be more than one. So anyway, that's my experience of the week. But thank you so much for joining us. I think this was excellent and really appreciate your time. And thanks everyone who hung in with us to the end. And look for us next month, where we will have a day in the life of an insurance commissioner with Barbara Richardson from the Nevada Insurance Department. So look for that invitation. That'll be coming out the next couple weeks. All right. Thanks, you guys.